Hello, today we're going to be doing a video here for StarBucks, ticker symbol SBUX. We're going to be taking a look here at their free cash flow. Their free cash flow, as you can see, it varies. They do buy new places, so they're kind of into real estate as well because they buy the businesses, and then they have a Starbucks there. So um, this is going to go into talking about their long-term debt and then talking about their assets versus liabilities. So as you can see here, we have their annual free cash flow. Um, as you can see, in 2014 it was negative, and then since 2014 it's been positive. There was 2 years that were outliers, such as 2018 with 9 billion and then only 114 million. So that's why we're going to take an average of their free cash flow. I just excluded 2014. We started from 2015 to 2022. Um, as you can see, even back here, 2009, 985 million. So the only year they've been negative since then is 2014. You'd have to look into that year more to know why and what's going on with the business. So as you can go over here, you can look at revenue. The revenue is increasing. As you can see, look. Take a look at 2013, 14 billion, 2022, 32 billion. As you can see, over the last 12 months, we're at 35 billion in revenue, which is a 9% increase year over year. We're going to go to their EPS. As you can see, it's declined a little bit over the last 12 months. It's at 3.29, but for 2021, it was only 2.83. So, as you can see, you go down here, you can look at their annual EPS. As you can see, in 2013, it was 0.01. And now we're in 2022, 2.83, and over the last 12 months, we're at 3.29. So that's really good as far as earnings per shares go. Shares outstanding, they are declining currently. They reported in 2022 1,159,000,000 shares. They're currently at 1.151, so it's a decrease of 0.04%. Their net income is declining, and you have 3,282,000,000 reported in 2022, and in 2014 it was at 2 billion. So it has increased since then. Um, over the last 20 months, we have 3.784 billion, which is a 9.2% decline year over year, but it's still net income. That's profit. Assets and liabilities, we do have less assets. You would expect that for a business like Starbucks to have less assets than liabilities. Their business model is for getting revenue, not so much as retaining assets. If you look at their liabilities, though, it is at 37 billion. That's an increase of 0.07%, and their long-term debt is declining year over year. As you can see, since 2019, it's been declining. Once again, over the last quarter, 2.77 decline year over year. So that's good. Their cash on hand, it is increasing. They are currently sitting at 3.620 billion. It's 11% increase since last year. You can come down here and look at their total cash on hand. Let's look at 2015, 1,611,000,000. 2022, we have 3,183,000,000. So that's doing good. Then they are still trying to open up different businesses over in other countries, even in China. They're really trying to get into China. So those are things to look into in the future. They will affect their free cash flow margin, profit margin, and other things like that. But those are also things that you can project into the future. Right now, we're just looking at their total financials, and then we'll go from there and create intrinsic value calculator at the moment for Starbucks without getting too much of what things may look like into the future. So we're going to come over here to our intrinsic value calculator, as I showed you, the total assets, total liabilities, total shares, outstanding shares, and we're going to get a negative net asset value of $7.25. But that's not how we're going to model this, but I'm just going to show you, like, if things just hit the fucking fan right now, that's what they're worth, as opposed to their net asset value. But we're going to come over here to a discounted cash flow calculator. See, 2015 to 2022, 9% growth rate. As we just showed you, they're growing 9% year over year. Their average free cash flow 3,604,000,000. 2% perpetuity, discount rate 8%, 1,151 shares. We're going to come to a discounted cash flow price of $91.32, and then we're going to use our discount rates 10%, 20%, 30%, and 40%. We're going to come over here to our dividend discount model. Currently, they have a dividend of 2.28, and their growth rate is right around 8% currently, but we're projecting a 6% growth rate with a discount rate of 8.5%. That's going to bring us to a dividend discount model price of $96.67. With a 10% discount rate, it gives us $87, which is under the current trading price. As you can come here, we can put it in here. We can just do SBUX. Boom, $91.27 is what their current trading price is. We come over here to Benjamin Graham. We're using 3.92 EPS, a growth rate of 11%. Oh, we should. Oh yeah, it was 11% because of revenue growth. 11%. We got a 4% bond rate, and we have a PE of no growth of 20 because Starbucks historically has traded above 25 PE ratio, but we're trying to get a good price. Comes to $72.78. If you were to get it around $25, it would be $90.87. We're going to come to our aggressive discount model just to find out what's going on here. So we're going to go ahead and take our outstanding shares 1151, 1151. And then what you want to do is take your average free cash flow 3604, 3604, growth rate of 9%. Their cash on hand, we already determined it's different. So how would you do that? You come over here, 3620. Then you're going to put that in here, 3620. Well, their debt, what does their debt look like? 13,544. 13,544. So this is going to bring us to we've 10% discount rate because it's more aggressive. Brings us to $91.38, $82.76. Let's look at our less aggressive one. Almost identical, but if we were to only give ourselves 8.5 discount percent, similar to the other one, which is 8%, as you can see, it would be $113.19 and $104.57 when you consider in the cash on hand and the debt. But we're going to use 10% because it's more aggressive, which is how we come up with this number 82.74 when you calculate in the cash on hand and the debt, 2% to perpetuity. But if it's more aggressive, it should really be 2.5%. So they just why did it do that? That's okay. We'll just leave it there for now because we're not too worried about it. But the final values, we have 91.32 discounted cash flow, dividend discount model 96.67, and the gram 72.78, which brings us to a value of 86.92. But if you were gonna come over here and do the PE no growth at 25, you know, because they are growing at 11%, you could justify the 25 PE ratio still. It would bring a 90.87. So if you go 90.87, which is right around our other values, we get $92.95. Give yourself a 10% discount rate. We're going to come to $83.67. 15%, $79.81. So if you want to give yourself a nice little margin of safety, and Starbucks does come down to below $80 again, that would be a great time to start a position, in my opinion. Do I currently own Starbucks? No, I don't, because I'm waiting for them to drop again to get back in. I currently think that Starbucks has some issues, you know, for the long term and making sure that their revenue can grow at sustainable levels. But if you do believe that Starbucks can do that, then they are trading around a decent premium. If you want to come over to Starbucks over here and look at certain things like their price ratios historically, their price to book ratios, their price to free cash flow, maybe even their net worth, you know, look into these things, consider these things, look into more of the metrics. They have other metrics such as their dividend yield percentage, which is currently sitting at 2.33. Sometimes if you come to the financials, you may want to look more into their financial statements. This is the income statement. You can look here at the balance sheet, the cash flow statement, This is good because it shows you, like, the net change in long-term, short-term assets, the net long-term debt, their current net debt, stuff like that. Their key financial ratios. A lot of people like to look at these. Usually, you can come here, you can see all these metrics just all on the same screen right here that people like to look at. Their current ratio is 0.76%. Their book value we already showed you, seeing -$7. One thing you do want to look for in Starbucks right now currently is that they are also currently their dividend is also at like an 80% payout ratio. That's something to keep in mind. So thank you. This is my evaluation of Starbucks, and let me know what you think, and let me know if there's any businesses that you would like me to cover. Thank you.